Namaste, everyone. It's a very interesting topic that most of us would have discussed, debated, deferred, and many times not even understood the details of it. For the simple reason that there's a lot of technicalities involved in this. What is this topic? This is about the NPAs of the banking industry. First and foremost, banking itself is a bit of a technical subject. It requires a bit of understanding on the techno economic part of the domain. On top of it, NPA happens to be an issue which is technical at one level. And the second level, if it gets into the business issues and worse, the political issues, it takes a completely different turn altogether. So, what I'll do in the next few minutes is take you through a basic understanding of how bank works, get into the NPA understanding, and from there try to understand what is the political impact in terms of influencing the banking in such a way that the NPAs zoom up or down. And finally, the most discussed misinformedly in a way is the difference between the write-off and the waive-off. So banking, as you know, is a very interesting topic. It is a lifeline of an economy. The banks provide the much required support services to the people who want to put their cash in a safe place with some decent returns and offer the same to the people who want cash for their businesses or any other purposes. Banks don't own all the money. The banks take the money from the depositors and lend it to the people who seek loans. Simple as that. Take money from the people who have excess and give it to the money who need it. As simple as that. Take the case of a 100 rupee deposit cumulatively. 10 people, 5 people put together. Let's say they put about 100 rupees in a bank. So let's say the bank is paying them about 4% of interest, which means to say 4 rupees is the interest outgo for the depositors. And as and when the depositors ask for their money back, the money needs to be given. It's their money finally. On the other hand, there are people who need loans. So the banks would give this 100 rupees to the people who need loans. Let's say the loans are given at the rate of 8, 10, 12, depending on different types of loans. Can be a housing loan, car loan, personal loan which is unsecured. So the rate of interest would differ. Let's, for the sake of our convenience of argument, take it as a 10%, which means to say the banks earn about 10% interest on 100 rupees, which is rupees 10. You give 4 rupees to the depositors, but you earn 10 rupees from your advances, that is loans. So the remaining 6 rupees becomes your income, which is called the interest income of the banks. Now, it's not that easy that the banks can lend the entire 100 rupees as loans. Why? The banks need to be inspiring some amount of confidence in the depositors. What does that mean? A depositor would have kept the money with the explicit and the implicit assurance that the bank will give the money back as and when she demands. It can be, let's say, in the savings account, so whenever you want to withdraw it, or if it's a fixed term deposit, 3 months, 6 months, 1 year, 2 year, you can take it at the end of the tenure, or even if you need it in the middle of the tenure, you can get your money back with a small penalty for having withdrawn earlier. But your money is safe. That is the assurance that the depositor has implicitly and explicitly. To ensure that this happens, what does the RBI do? The RBI says you cannot lend the entire 100 rupees. Instead, it says you need to put aside, let's say, about 10% with the RBI. It is called as the CRR, cash reserve ratio. So out of every 100 rupees that you get as deposits, 10 rupees stays with the RBI in the form of deposit, which is absolutely safe, which is absolutely sure and certain, so that the bank can get back its money to give it to the depositors should an emergency so arise. So you have 100 minus 10, that is 90. You can't lend even the entire 90. How much do you lend? It will be less than 90. Why? Once again, the RBI insists that you put aside at least some amount. It can be 12, 15, 20. Let's take it as 15 for the time being. 15% of the deposits as SLR, statutory liquidity ratio. What does it mean? These investments or the assets should be in the form of those assets that are easily liquefiable, that you can immediately convert that into cash. What are they? It can be gold, it can be G6, that is the government securities, or it can be a 5-day, 7-day kind of a loan, interbank loan that was very, very short term. So these are the things that a bank can get back immediately, so that if a customer so demands and if there is a need for the bank to give the money immediately, the bank is able to do so. That inspires confidence in a bank. So coming back to our original example, 100 rupees as deposits, but you have 10 as CRR, 15 as SLR, together becomes 25. 100 less 25, that is 75. So your ability to lend is only up to 75 rupees and not up to the entire 100 rupees. What does it mean? While the remaining 25 will earn a good amount of interest, it will be fairly small, given the high amount of safety, high amount of security that it has. Higher the risk, higher would probably be the interest charged as well. So the remaining 75 is the amount that the bank has to lend to the borrowers, which means to say the bank needs to be very careful to lend to people so that not only can it maximize its interest, at the same time it can ensure the safety of the money so lent to those people. Let's say the same 10% of interest on 75 rupees gives you 7.5 rupees worth of interest income. So your net interest is 7.5, less the 4 rupees that you give becomes 3.5 rupees. So far so good. This is how a basic banking works. Now let's come to how does a NPA happen? How does a NPA come into being? NPA stands for non-performing asset. The money that the bank would have invested is called an asset. And if it's performing, which means that it is generating income, which is the interest income. If it is not generating any income, it is not performing, it becomes a NPA, non-performing asset. Technically speaking, for 3 months, if an asset is not giving back the interest, it becomes an NPA. So what does an NPA imply? Let's look at the example yet again. 100 rupees, as I said, is the deposit. 75 is what we have lent, we as a bank has lent. Let's say 10 rupees out of it is a loan that has gone bad. What does it mean? It is not paying its interest anymore. So what would be the interest accruable to the bank? It will be 7.5 rupees less 1 rupee, because the 1 rupee that goes out of the NPA wala 10 rupees. So 6.5 rupees is your total interest, less the 4 rupee interest that you anyway have to give to the depositors. You are left with only 2.5 and not 3.5. That's point number 1. That's the first impact. But a bigger impact is point number 2. What is it? The depositors who have given you money have given you money, you as in the bank. They have not given money to the business which has failed, which has become an NPA. So who was the depositor? Who has the moral responsibility and obligation to return? The bank. So the bank will have to shell out rupees 10 to the depositor out of its own funds, out of its own capital. So the capital will not be as big as the deposits, obviously, and use the deposits to lend loans. And if you are lending loans, and if the loans become NPA to a very large extent, how do you take care of it? Only by letting out your capital. What does it mean? Over a period of time, the bank becomes low and low on capital, such that at some point in time, it will have to go out of business. If it's a public sector bank, then the government will not let it go out of business and start pumping money into it. Hey, whose money is that? Taxpayers' money. You and I would have paid the taxes, and that taxpayers' money goes into filling up the coffers of the bank to shore up its capital. But why? Because some person defaulted. His assets became, his borrowings became an NPA, and therefore the bank had to take money from the government, which in case is your and our money in the form of a tax. So you see it, someone else's inefficiency. I'm talking of a best case scenario. Someone else's inefficiency will lead to a situation wherein you have to pay money out of your taxes to them. So therefore, it's very important and pertinent that the NPA level be as small as possible, suppressed as possible, so that the quality of assets are very, very high. Higher the quality of assets, there is no need for any external capital infusion. Your interest income is good enough to sort of make more money, and the money that the depositors have given you is returned by the borrowers, and therefore the banks need not have to worry. Now, in this case, we spoke of 10 rupees out of 75 rupees. What does it happen if it becomes 20 rupees? The cause for concern. What if it becomes 25 rupees? It's a bigger cause for concern. If you look at historically, from the year 1996 onwards, when Atal Bihari Vajpayee ji took over as the Prime Minister of the country, it was a very shocking time wherein the gross NPA was to the tune of 16%, 16%. That is, for every 100 rupees that you are lending, 16 rupees never comes back. That was the shocking state of affairs. By the time Vajpayee ji completed his tenure, he had single-mindedly put his focus to ensure that the NPA comes down drastically, and it came down drastically. From a 16%, it became 7.8%, less than 8, which is the halfway mark. So far, so good. By the time the UPA government came in 2004, they had a fairly performing NPA situation with the banks. 2004 to 2014, 10 years of the UPA government, where did the gross NPA position land up? Very interesting question and an intriguing question as well. From 7.8, it shot up to 12% yet again. Instead of going down, it went up. It was a big shocker. And 12% is what the stated figure was. I'll come to it in a bit while. The real amount was much more than that. Higher than what even Vajpayee ji inherited. It was more than 16-17%. So the stated was 12%. Today, where are we? Today, in the year 2023, December, what is the figure of the gross NPAs? From a 12.3 at the start of the Modi regime in the year 2014, in about 9.5 years, we have come down to 2.3. I repeat, 2.3 gross NPA. Which means to say, the kind of a disease that had taken care of the banking system, that had crept into the banking system through the NPAs, we are still talking of NPAs as if it's a business inefficiency. We'll come to the political interference a bit later. From a 12.3 to a 2.3%, that is a massive achievement of the Modi government. How did he do it? In brief, he made sure that the banks were asked to open their books thoroughly. 2015 was the year when the asset quality review process took place. The government of India told the RBI in no uncertain terms that all the banks have to really show their books. What does it mean? The banks used to do something called evergreening of loans. It's a very interesting point. It's a very interesting thing how banks are smart enough to camouflage NPA, a non-performing asset, as a good performing asset. How do they do it? Take example. Let's say the bank has lent about 100 rupees to a client and the asset has become an NPA. Ideally, it should be showing that 100 rupees as an NPA. Instead, you don't want to show it as an NPA. You lend about another 250 rupees to the client and ask him to repay the old loan. So what does it look like? The old loan, which was taken by the client, has been repaid along with the interest. And now he's taken a new loan. And he's still servicing the new loan. So for all practical purposes, the fact that the loan went bad never enters the books. It looks as if your NPAs are lower than actually what they are. But this was the situation in the year 2014 that made India one among the fragile 5 economies. The world outside knew that the Indian banking system was rotten from within. That needs to be cleaned up. That needs to be nursed back to health. Coming back to what the government of India did through the asset quality review mechanism, it was a shocking revelation. 11 out of 21 public sector banks were found to be having unacceptable level of NPAs. The true NPA level came out. What the UPA government had showcased as only 12%, the real gross NPAs was to the tune of about 17.2%. Much more than what Vajpayee ji had inherited in the year 1998. With this thing in mind, it was a single-minded dedication of the Modi government, the then Finance Minister Jaitley ji, that they cleaned up the entire banking system. 11 out of the 21 banks were put under the RBI, what we call it as the PCA, Prompt Corrective Action. It had to be prompt. It had to be corrective, and it was an action. It was an action-oriented process. Those 11 banks, over a period of next 5 years, were nursed back to health. The NPAs were made to be cleaned up. Recovery in a very massive manner, ruthless manner was done. The real willful defaulters were made to cough up the money. How much? Any guess? In the last 9 years, about 10.5 lakh crore. I repeat, 10.5 lakh crore rupees have been recovered from the NPA segment. Not an easy thing. It requires a big amount of dedication, commitment to the cause of nursing the banks to good health and putting country above political considerations. From a very high, real high of about 17%, today gross NPAs is just about 2.3%. IBC, you would have heard of the term IBC. There was a massively big influence in this. What did we do? While at the one hand you have genuine businesses that go bust, those who are protected, those who are taken care of, a businessman who genuinely could not succeed was allowed to sort of move on, while the willful defaulters were really cracked the whip on. The willful defaulters could not buy their assets back. That used to be a drama that would happen. Let's say you borrow 100 rupees from the bank and the asset goes bad, and the bank, as a matter of distress sale, sells it about 20 or 30 rupees. The same promoter buys it back at 20, 30 rupees and the loan is cleared off. So technically, he is making an additional sum of about 70, 80 rupees just by gaming the system. And that was stopped due to the IBC. The clients who had earlier tons and tons of money and were complacent, thinking that the government is in their favor, came back running to the banks to pay up their bad debts. That means to say 10.5 lakh crore money came back to the banking system. The government of India ensured that the banks were recapitalized to the tune of 3 lakh crore rupees. In the year 2014, the actual status of the banks was that of a 80,000 crore loss. They had stated it to be a 50,000 crore profit, but the reality was it was a 80,000 crore loss. And from there to the year 2023, we see that the public sector banks have collectively made a profit of 1 lakh crore. They are nursed back to health, they become strong, and they have also made profits. This is the journey of what the NPA, the asset quality review that was taken by the Modi government, the kind of an IBC-driven intervention that ensured that the money was recovered. The SARFAESI Act was ruthlessly enforced. And most importantly, the kind of a message that went to the bankers was that you be professional, we have your back. Don't give way for phone banking. The phone banking was a term wherein a political leader or their cronies would make a call to the banks, ask them to give a loan, knowing very well that would become an NPA. And as I said earlier, that NPA would be taken care of by your and my money in the form of taxpayers' money, the tax that we probably give to the government of India. That has been saved, drastically saved, not just saved, but we have got back the NPAs as well to the tune of 10 lakh crore plus. So if you look at the gross NPA, it is 2.3%, and the net NPA is less than even 1%. It's 0.95%, a massive achievement of the Modi government. This is what probably differentiates an earlier government that didn't take care of the banking system and today's government and the Prime Minister Modi that has ensured that the banks are nursed back to health. That's at the one level, the kind of NPAs, the amount, right from Vajpayee's days, we saw 17%. He brought it down to less than 8%. The UPA pushed it up to 12% nominally, but in reality about 17%. And Modi brought it back drastically to 2.3% as from today. And still not satisfied. As we go along in the next couple of years, I'm sure the gross NPA itself will further come down to just about 1% or so. That is the kind of a ruthlessness with which they are moving. Now coming to the very interesting aspect, the political misinformation that generally comes in the form of write-offs and waive-off. When you say you recovered about 10.5 lakh crore rupees, the money has actually come back to the bank. But in the meantime, that amount would be shown as written off. Write-off is a very, very technical term. A technical term. Okay? What does it mean? There is a book of the bank, the accounts of the books, and in those accounts, the account that had become an NPA is kept out because that's a diseased account. You say, I'll keep it outside so that I'll be true to the depositors. I tell them what the real position is. And I tell them this particular account A, B, C, they are bad. I've kept it aside. But you don't worry, I'm putting my personal money from the capital reserves and give back your deposit. But also making sure that the amount kept aside, ABC accounts, we will be chasing them legally and make sure that we get the money back. But till such time we get the money back, you as a depositor don't have to worry. I'm giving you, I as a bank will put my money and make sure that you get your funds. That is the technical write-off mean. What does the politicians who are intended on fake messages and misinformation do? They equate write-off with a waive off. What is a waive off? Waive off means, broadly speaking, you don't have to give the loan back. That kind of a message is a waive off. For example, farmers would have taken some loan and you tell the farmers if there's a drought or whatever, you don't have to give the loan back. The government will pay for it. That is a waive off. I repeat, not a single rupee has been waived off for these NPA accounts of industrialists in the last 10 years. It has been written off, as in put aside. If you want to use a term, you can use it as put aside so that there is no information problem as far as the depositor is concerned. He gets to see the true picture of the bank's health. At the same time, there's a bank's commitment that the bank will put their money to ensure that the depositor is not at a loss. So a write-off means it's a process wherein they're putting the bad accounts in one place. They ensure that the bad account is chased and the money gotten back and the money is put back to the bank. Sometimes there is a mechanism wherein there's, as you would have heard of it, called factoring or bad bank. What it does is the bank, let's say, has got about 100 rupees worth of bad loans, NPAs. It tells the recovery agency saying that I'll give it you at 75 rupees or probably 80, depending on how bad the asset is. You give me that 75 rupees so that my books automatically become clean with a small loss of about 20-25%. You can go chase them legally. You have all the rights and get the entire 100 rupees back. Which means to say they are adding value to the entire economic process and they chase and get the money back. The banks have a certainty that they've got their money back. They are no more have to sort of worry about NPAs. Their books are neat and clean and they can go ahead and make deposits. They can go ahead and make loans to the people who are genuinely interested, especially the genuine borrowers. The willful defaulters, the banks go after them royally. The genuine defaulters who don't have it, who cannot have it because the business has failed, are treated respectfully through the IBC or so on and so forth process so that they can move on for further pursuance of their business interests. So friends, broadly speaking, we understood how does a bank work? How is it that an NPA is created? How is it that the NPA, if it becomes big, becomes a problem for the entire banking system? How bad it was during the pre-Vajpayee era and post-Vajpayee era, and how is it now that Prime Minister Modi reduced it to a very, very respectable level and made Indian banking one of the healthiest bankings? Last but not the least, we also saw the difference between the write-off, which is a technical term, and a waive-off, which is generally a political gimmick done by some of the parties just to be populist without worrying about the financial prudence. Why I am stressing on the term financial prudence is for the simple fact that if you are not prudent with your money, you are, as in the bank's money, the taxpayers' money, the state's money, each and every state government will go the Kerala government's way. It's a very sad state of affairs to see the Kerala government go to the Supreme Court with the begging bowl after taking all the loans and additional loans from the central government and the market, asking the Supreme Court to get some more money from the central government. Why? Because it was fiscally imprudent. Fiscal discipline wasn't maintained. That applies to the banks and to the governments as well. Anyway, sticking back to the banks need to be healthy. For that, they need to be careful, mindful of the NPA level. And today, as we speak, we can proudly say that the Indian public sector banks are second to none in terms of being healthy, in terms of controlling the NPAs. With this, friends, I hope you get the differentiation between the write-off and the wave-off, and how bad it was earlier and how it has changed now. This happens to be one of the key aspects of the white paper that the Finance Minister, Nirmala Sitharaman, put in the parliament and said this is how bad it was. It took time for us to understand the problem, rectify it, solve it once and for all, and nurse the banking back to good health. Thank you so much for watching. Have a good day.